Gil Luria of DA Davidson remaining neutral on the stock while raising its price target. He writes the following: "We found out how on edge investors are about technology. If the beat isn't big enough, the consequences were severe. Value is shifting quickly as the bottlenecks emerge." Gil joins us now for more. Gil, welcome. Lisa Shattuck called it a bit of a red flag for these semis trade. Do you consider it a red flag or just a small crack?
A small crack. Let's not forget, Broadcom just grew revenue 50%. It grew its AI revenue 143%. So it's a very good result. But investors had now been trained to expect a lot more than that, because some of the upside results from companies like Intel, AMD, and Dell were so spectacular that investors just raised their expectations too much. You're talking about a cycle, and semis are always a cycle. This is not any different. None of us know how long the cycle is going to last. We all speculate and estimate, but it could last through next year and it could last through 2030, and those are very different outcomes. What we do know is that different stocks are trading differently on that cycle. I would argue that companies like Intel or even AMD and many of the optical stocks and the nuclear stocks are trading as if the peak of the cycle is until 2030, where stocks like Nvidia and Micron are trading like the peak of the cycle is next year. So that's where we see the opportunity, and betting on the ones that not a lot embedded in the valuation. Nvidia at 22 times, Micron at 10 times, look a lot safer than Broadcom at 35, AMD at 40, Intel at 100 times. And that's where we see the opportunities, because there is going to be a cycle. We just don't know how long it's going to last, because the developments in AI are so rapid that it's very hard to predict when we get to peak functionality, when we get to quicker adoption. So we have to play the cycle carefully by going to the less demanding valuations.
There's also a degree of uncertainty, Gil, about the addressable market, and that clearly was put on display with SpaceX and some of their projections. And maybe it's what's at stake with Nvidia as well. I mean, is this an issue of people saying that the peak might be next year, or is it people saying that the run rate just cannot continue at the pace that it has?
Yeah, two sides of the same coin. We look at the hyperscalers. They're spending most of their operating cash flow. Google just went out and raised $80 billion of capital. By the way, think of that as coming on top of the capital demand from SpaceX, Anthropic, and then OpenAI. You also have Google going out for that much. Next, you'll have Amazon, Microsoft, and Meta going for more capital. So the capital demands on the market are impacting the stocks already. And if the hyperscalers raise that much money, they can continue to raise their CapEx rates. They do see this as a good return on investment. I know that's a controversy. It's not for them. They are growing revenue at an accelerating rate at the same margins. That indicates a good return. To the economy, you can see the return from the run rate of OpenAI, Anthropic, and Google's products. Those are products that are being bought by consumers and businesses. That's real economic value. And right now we're at more of $100 billion run rate. So there is return. We do expect these hyperscalers to continue to spend. But again, part of that's going to come with more capital demand, which is going to have even more of an impact on stocks as they soak up the demand, combined with those IPOs doing the same thing. So that's a lot of volatility ahead from all these directions.
At what point do the semiconductors lose pricing power? At what point do you have some of these companies, and frankly, their creditors, pushing back and saying, I'm going to lend you $10, and then they're going to charge you $20, and then you're going to ask for $10 more, and then you're going to ask for $30, and then it's going to keep going up. I mean, this is what it feels like, an auction house. At what point do a lot of the hyperscalers say, enough, stop it already with the price increases? At what point does that leave them potentially with some capped margins?
The hyperscalers don't have that many options. They are still, by and large, relying on Nvidia chips almost entirely. That makes Nvidia's gross margins around mid-70s relatively safe. Now, they're going for alternatives. They're trying to make their own chips with Broadcom, and they're trying to ramp up production at AMD. But those are still at very early stages, and those are coming in the mid-70s. So right now, those are the only options. So the hyperscalers are not necessarily in a great negotiating position in that regard. So that makes those semi margins relatively stable. Even in memory, the supply is just not there. So those companies can be in the high 70s even. How long that lasts, again, is a matter of how long the cycle lasts. But right now, it looks like it could last through 28, 29, 2030, which for most of our investors is their investment time horizon, and they can be comfortable with that. But again, that's only if AI continues to progress. If diffusion of AI happens into companies that generate productivity from that, if consumers are willing to subscribe or are willing to accept ads in their chat, only if those things persist will the hyperscalers continue to invest and keep the margins high at those semi companies.
Hey, Gil, it's good to see you.